Bank repossessions are far worse than we all thought. The banks are on the verge of collapse. Yes, things are so bad. In fact, the 90-day balance delinquency rate is up about 26.8% from a year ago. With overzealous lending by the banks when times were good during the pandemic, people were able to walk in and get all kinds of loans. We're seeing now repossessions are up 23% spike in the first half of 2024, and largely because of the accessibility for younger buyers who happen to be some of the most unfortunate recipients of car repossessions. With high interest rates that we've seen, even with the Fed dropping the interest rates by 50 basis points in the last few weeks, it still hasn't helped enough. And now, since this overzealous lending by some of these banks and non-banking institutions to people that were higher risk or younger buyers, now we have an absolute apocalypse, if you will. A repocalypse. It's a sad state. People are losing their vehicles after 30, 60, 90 days specifically. Delinquencies are grossly on the rise. CarEdge pulled together a survey in coordination with Black Book and found that about 31% people who bought their cars in the last few years are now owe more to the banks or the lending institution than the vehicle's actually worth. And close to half of electric vehicle owners owe more on their vehicles also than they're worth. And all is bearing underwater or being in a negative equity position just sets up everybody for a failure, because now they want to trade off. Well, they can't trade off. They have to buy out the negative equity first. Or there are some tips that a lot of people are starting to learn, and I'm going to share those with you in a moment. But did you realize also 6 out of 10 buyers and car owners today that took out loans in the last few years truly believe that their car is worth more than they're actually worth based on a repossession or wholesale prices? They can't get out of what they believe their car is worth. It's a sad state of affairs. And some of the worst offending vehicles that were people were grossly upside down or underwater or in a negative equity position are, of course, as I mentioned, electric vehicles. Tesla being one of the worst offenders, as well as BMW. These manufacturers, of course, like to pump out vehicles, get you incentivized to buy those new vehicles with charming rates, charming incentives, throwing in extras, but unfortunately people can't see through the smoke and mirrors. And they bought at a high time when demand was high and supply was low. People were willing to pay almost anything. And unfortunately, one of the other big issues or impacts were if you happen to overpay for a lot of these vehicles, if you're one of those buyers that paid above sticker, paid market adjustment fees, and then all of a sudden you want to turn around and sell it or trade it in 2 or 3 or 4 years later, you are one of those people that are almost sure guaranteed to be underwater in a negative equity position on your car. Buying these cars with less money down and for a longer finance term just puts you in a much more unstable environment. And those are the people that are likely going to be underwater. Now, there's only one fortunate aspect to people that find themselves delinquent on their car loans or potentially handing their keys back to the bank or the lending institution, is that there's not enough tow truck drivers. That seems to be the ultimate crisis right now. Banks are trying to recoup what their losses. Banks are trying to get these vehicles off to auction, sell them, flip them, and get what they can out of these vehicles. But unfortunately, there's not enough drivers to circle around and pick these vehicles up and repossess them, to send them to auction, to flip them, get that money back and send back to the bank. There's just not enough drivers. And for those unfortunate people giving up their vehicles, that might buy you a little bit of time. But it's all just a little bit too late. And now some of these wholesale auctions are starting to see more vehicles that are being auctioned that are doing so based on repossessions rather than standard sales. And that's unfortunate. We haven't seen that for a few years, but it's on the rise. Yes, a lot of repossessions are skyrocketing. And in this short 365-day span, an increase of 23% up on repossessions is very telling. We're starting to see the writing on the wall with a cost of living crisis. People don't have the money. People are looking to make decisions about whether they continue making the payments on their car, or of course the increased price of food and gas, insurance for their vehicle, or more importantly, even a house and a roof over their head. A lot of these repossessions are coming due to limitation in money, the economy, and we haven't seen times like this for several years, but we're back. Repos, negative equity, cost of living crisis are an all-time high. And it doesn't matter the fact that we've seen some reductions by the feds on these basis points, is still not enough to dig people out of this hole. And as of June, about 5.62% subprime buyers were unfortunately at least 60 days late on their car loans. And that clearly is telling some of the conundrums that these buyers are facing. I talk to people every single day that share me. I get texts, I get emails, and I know people in the business Definitely, I see a lot of people in the banks, and I have friends in the banking industry, especially in commercial lending as well as these types of environments, and everybody is screaming. They're seeing repossessions up. We're seeing desperate buyers. We're seeing people trying to get out of these loans. But here's the trick. If you find yourself in a negative equity position, maybe you took out your car loan for too long a period, you didn't have enough money down, maybe you overpaid when it was new and the depreciation finally caught up with you. For the sake of trying to limit the damage, basically the idea is eventually there's a crossover point where you're in negative equity for the first number of years. But let's say you take an 84-month term on your car loan. You're going to have to continue to make your payments. So the least amount of collateral damage comes in a way of just continue making your payments, keep making their payments, and pay that car off, pay that loan off virtually in its entirety. Then you get to a point where you will cross over and you'll actually have a little bit of positive equity. Essentially, by the tail end of your loan, you'll probably be in a situation where you can probably sell your car for a minor little profit. I mean, not really a profit. Most people are losing money due to the heavy depreciation that most cars go through. But ultimately, your best bet is just pay the car off month by month, bit by bit. If you can pay it off earlier, that's better. If you can double down or pay a little bit more to try to get that loan behind you, ultimately you want to try to do that because you limit the amount of interest charges you're going to incur. But basically pay that loan off its entirety. Don't trade it in and absorb more negative equity into or roll that into your next car loan. That's one of the worst mistakes you'll ever make. Not to mention, once you start to see delinquency, once you've been tagged by the banks, you've been blacklisted, essentially even any future purchases, you're going to pay a much higher interest rate. Much, because now they look at your ratings are going through the roof, and now unfortunately you're going to continue to pay higher rates, but whether you're looking at a mortgage, car loans, truck loans, maybe buying an RV, anything you buy in the future will have a negative impact or will have a significant tag appropriated right to it just because you missed a few car loans earlier on, a few car loan payments. It's a sad state, but this is what a lot of people are in. And also we're seeing increased monthly payments. Of course, these high-priced vehicles just continue to rise. We don't see any kind of major relief, although vehicle manufacturers like Stellantis are starting to learn their lesson. They have to do something. They have to listen. Finally, consumers are saying, we're done, we're fed up, we're not buying these products. And it's very telling because the day supply is rising at an alarming rate, and Stellantis is feeling the burn. So bad, in fact, that the CEO is being asked to leave. Nobody's buying the products. There's lots of complaints about quality control issues. Even products like the Jeep and their plug-in hybrids are worrying of, issues with potentially burning. Park your car outside if you have one of those. So it's a bad state, but these rising prices on these new vehicles are getting out of control. And that's what's lending itself to these high prices, putting people negative equity and unfortunately drawing out longer loan terms and putting people at a much bigger risk of being repossessed, which it's happening. We're seeing it every single day. New car finance rates are up about 7.3% right now. We're seeing about 11.5% on used car loans. And this, I've even seen people actually borrow a significant amount of money against a used vehicle. Because remember, a lot of people couldn't get those brand new vehicles. So they were looking at a 3, 4, 5-year-old vehicle, and in some cases paying 80%, 90% of what they were new because they were that desperate and supply was that short. So as a result, they were paying, I heard of people paying $40,000 and $50,000 for a 4-year-old vehicle. And now they're having to draw out that long loan term on a vehicle that's already got 85,000 miles on it. You talk about setting yourself up for failure. That's a big failure point. And according to Experian, the average monthly car loan is right now, it's rising, and it has been rising for some time, is about $734 per month. And that just puts people in a pickle again further. And we're seeing a significant rise in the amount of people borrowing over $1,000 or $1,200 or $1,500 per month on their car loan. Yes, 15% of the car loans currently open are over $1,000 a month. In the US side, Canadians, you can't even barely buy a car today without paying at least $1,000 a month because the buying power that we see in Canada is much less, much lower. And I share with you all the time, I show you all these full-size diesel trucks that are going for $120,000, $130,000. I'm showing you half-ton pickup trucks, premium loaded vehicles. We're seeing, in the Platinum 4 F-150s, and we're seeing even in a lot of the Ram products. A lot of those vehicles are now in that $95,000, $100,000, $105,000. And sadly, that just puts people, we're in a position where even on a 5-year loan term, 60 months, people are still paying $1,200 or $1,500 a month. So even for garden variety vehicles, people are overpaying for a lot of these high-priced vehicles. And because they don't put enough down, they get themselves in a long loan term, something comes up, finances, health conditions, layoffs at the job, and all of a sudden they find themselves compromised. And all too often we're seeing people getting repossessed on. And a lot of these vehicles are repossessed at an alarming rate. Banks want their money. They're not able to recoup all their money because a lot of these vehicles are in a negative equity. So even when they're sold in the auction, they're only getting partial of their money back. They're losing money on every one of these transactions. And also on top of that, many of these vehicles are getting delayed in delivery to the auction house, as I mentioned already, simply because there's not enough drivers to go around. Anyway, I'd love to hear your thought, but it is a serious crisis right now, and much worse than a lot of people take and give it credit for. This is a much bigger problem. This isn't just about cars. This isn't just about car loans. This is an indication of what's going on in the economy. Housing, we're seeing housing crisis, overpaying. We're seeing a lot of repossessions in houses. We're seeing a lot of issues, and of course, people not making their credit card payments, people not making their student loan payments. People are broke. They don't have the money, and this is going on all over. And the car loan industry is one of the leading indicators because it's the second highest investment in your lifetime. But it's an indicator more than just cars, but the entire economy and the direction that it's headed, spiraling downwards. Hope to see each and every one of you on the next one. See you real soon. Bye-bye.